Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day, and on this episode, I'm joined by Ian Everard, an enthusiast of sound money and precious metals, and the owner of ARC Silver Gold Osmium. We're going to get his thoughts on the results of the US presidential election and their effects on the gold market, the increasing inflow into precious metals ETFs in the West, his thoughts on Warren Buffett building the biggest cash position in Berkshire Hathaway's history. Is it a warning sign for the broad market? And much more up ahead in my conversation with Ian Everard. So, of course, we have to start today's conversation with the presidential election results. We are recording this on November 6th. Fresh off of those results, where Donald Trump has now been officially declared the president of the United States. Interestingly, gold and silver both down on the news. Gold down nearly 3% as we speak. Silver down 4.3%. The US dollar is up. I suppose some market participants are looking at this as a Trump win is strong for the US economy and for the dollar. And so there's no need for safe haven assets. I mean, I guess on the surface that's what I'm thinking. What are your thoughts there?
I think with the possibilities ahead of us, I think safe haven assets are even more necessary than maybe they ever have been in my lifetime, or at least in my politically, what's going on around the world lifetime. We've got to measure now what was rhetoric and what is actual policy. If it wasn't rhetoric that Mr. Trump wants to support Israel to blow Iran up, we'll be looking at $300-400 oil, a whole different world ahead. So there are so many more uncertainties now than there were before we knew this result. Hopefully things will calm down a bit, because it's the rate of change that catches most people unaware, and it's a rate of change of events that can cause a cascade of events that unintended consequences.
Yes, absolutely. And I want to follow up on gold here because it has been having a fantastic year despite being down on the day. We know that precious metals, along with commodities markets in general, can be very volatile. But I recently held a gold roundtable discussion on the channel with Andy Sheckman, Alistair McLeod, and Steve Hankey. And I posed the question to them, what inning are we in when it comes to this precious metals bull market? I wonder how you would respond to that.
So on a timeline, we could be very near the end, but on a price action, it hasn't started. It may sound a little bit contradictory, but looking back at the last 7 precious metals major moves, the bulk of the action happened in the last 10% or so on a timeline. So when you get human action, when you get panic and you get fear, fear is just as a powerful mover of capital as is greed, and maybe even quicker. And then, if we get a stampede, many wiser people than me have stated, there's just no slack in the supply. A small uptick in demand on retail, then there is no retail product left, and then what comes back on the market is higher and higher premiums. So you get a runaway effect very rapidly. So yes, I think we could be 70-80% in on a timeline, but we haven't seen that big move yet.
Very interesting perspective. I want to talk about silver as well, because obviously performing fairly well over the course of the year, nearly reaching the $35 level before retreating somewhat. At the moment, still holding above $30, I believe around $31. I spoke with Michael Oliver on the show recently, and he said he thinks silver could take out $50 in a flash as the reality of the debt situation in the West really sets in, along with a number of technical indicators he's looking at. What are your current thoughts on the silver market?
Yes, I mean, Michael Oliver is way smarter. He's many pay grades ahead of me. But yes, I think very easily. Look how it took 7 goes to get through $29, 7 goes to get through 30, 7 to get through 31. It broke through 32, pulled back, And then the next attempt, it didn't stop at 32. We nearly hit 35. So the volatility to the upside is increasing as well. And that move, yes, could happen in hours, if not days.
Now, inflows into gold and silver ETFs have also really been picking up steam. I want to read you a quote from the Globe and Mail dated October 28th. While spot prices eventually dipped by the week's end, ETFs tracking these precious metals still recorded gains. Precious metals ETFs were up 1.25% overall. Notably, silver ETFs saw the strongest rise, reflecting silver's notable price movements. I don't like most of these ETFs, I should say off the bat, as a way to invest or to hold gold and silver, but they are what your average retail investor are likely going to turn to in the case of, chasing gains. Do you think this trend continues in the ETFs moving forward?
It's interesting, isn't it? Because it's more mainstream than us traditional stackers. If you don't hold it, you don't own it. And we seem to be a finite part of the population, whereas the ETFs are easily accessible. It's literally a couple of clicks, and something is sold and something is bought. Interestingly, the person I know with the greatest experience in precious metals over 40 years, he saw a couple of months ago more institutional buying, both through ETFs and both through physical. And, he is a major supplier of the institutional family office buying physical. So they seem to happen at the same time. There was an uptick in large purchases, but not in the general retail. So, yes, it is interesting that they are ticking up. And if they're being done properly, that will be taking metal off the market, off the exchanges, or stopping metal getting onto the exchanges.
And what are you seeing from your side of things at ARC, Silver, Gold, Osmium in terms of retail demand for the metals at the moment when it comes to both gold and silver?
Silver predominantly. We do sell a fair amount of gold. But I think if people come to the same conclusion that me, that silver is fractional gold and it's gold at a discount, the gold-silver ratio is, in my opinion, a lot of other people's opinion, is completely stretched out of any reality. And when we do get more demand for gold and in the retail, people quite often consider, I can buy 1 ounce of gold for, getting close to $3,000. But we're still over 2,700 with a premium for a 1 ounce gold coin or 1 ounce gold bar. A lot of people then look, well, I can get 75 ounces of silver. They start to think about that ratio. And when you think about the ratio and you look at it, it's coming out the ground at 8-1, half goes into industry. A big part of that gets tied up for decades, and a big part of the total mine production actually gets lost permanently. I mean, historically, we have now destroyed over half of all the silver ever mined in human history is now inaccessible and unavailable. So, I think silver will be perceived as a much better value than gold, and that will drive retail demand.
Now, I want to circle back to something you said about potential expanding conflict and a war with Iran and what that might do to oil prices. If that scenario does play out and we do see that type of direct strike or direct attack on Iran, potentially on oil production facilities, etc., what do you think that does to the gold price? Because if oil goes to $300+ a barrel, that's a major input into the mining of gold, right? That's a major input to the energy cost. So you're going to see less gold able to be economically mined, and I imagine that would put a stranglehold on supply to some extent. Do you see it that way?
The mining costs definitely increase. I think gold is going to be a bit more resistant because it's way above its cost of production. I mean, you see different figures from $800, $1,200, whereas silver as a percentage is much closer to its actual cost of production from a silver mine. But then if we do get a rapid rise in the price of oil, we'll that will cause a rapid worldwide depression, which will cause a reduction in copper, zinc, and lead mining, where 80% of the silver comes from. So there may be a delay, but then we could, we'll be losing or having a great reduction in silver as a byproduct, which is where 75-80% of silver comes from. So yes, with all of these hair trigger events, Mr. Trump has publicly stated that he wanted Israel to be able to strike the Iranian nuclear programs. So if Israel is not only given a free hand, but US assistance to take out, if you wanted to permanently disable Iran, you would take out their ability to export oil. But Iran has made it pretty clear that if that was done, they have enough military capability to take out all of their competitors and enemies in that area. Because it's not like we've got one friendly whole group of Arab nations. They're all jostling for position and power amongst each other, politically, clan, religious, you name it. There's lots of feuds going on there. And then if Iran, if they knew they were going down, they might want to take down, use that as literally as their nuclear approach to a nuclear approach. It would do horrific damage. Ironically, here in the US, we would be very insulated from that as net exporters of oil and oil-based products. It would mean some rejigging of our refineries, extra capacity to utilize some of the oil we export because we haven't got the infrastructure to refine it. But in the medium term, the US will be very much insulated, and we could well see two oil prices, a US price and a world price.
That's an interesting thought, similar to how natural gas is priced differently in different jurisdictions.
That's extreme. I was looking at the European situation. Electricity is 4 to 5 times more expensive in Europe, and gas is 3 to 4 times more expensive, which puts the US as a huge advantage for any energy-intensive industry manufacturing. Even with higher wages here, it's making the US more and more appealing for manufacturing a lot of goods and chemicals.
Well, I want to get your thoughts on the US economy because, the cost of living does seem to be prohibitive at this point. Inflation continues to eat away at savings. We know that the inflation reported by the Fed is so different from the actual inflation experienced by people in their day-to-day lives. Credit card debt has reached extreme levels, and it seems like governments are looking for more ways to tax citizens every day, not only in America, but in many countries at the moment. I've heard a wide range of opinions on the subject, from the West is in terminal decline to the exact other side of the coin. The U.S. economy is actually very strong at the moment. Sometimes it's difficult to separate, fact from fiction in this hyperbolic world of social media headlines. I'm wondering, how bad do you think things are out there in the real economy?
Whoa, big question. So let's start with Europe, and let's just look at Germany. Germany's economy is declining. Their industry is in, a lot of problems going on there. They've had a good run after being rebuilt with the Marshall Plan. Pretty early on, they were, ruling the world with exporting predominantly cars, but machine tools. That's not coming to an end, but Volkswagen just announced they're going to shut 3 plants down. That's never happened. So there's a cyclical change in Germany's economy, which will affect the whole of Europe dramatically. I wouldn't like to be in their situation. The US, I think our sentence has been delayed somewhat. One, because as the world has debased its currencies, it's been a worldwide event. And to a certain extent, that has masked the weakening, because people just tend to compare currencies to currencies. So you don't, and if you're not comparing currencies to real things, what that ratio is, you don't see the big picture of what the currency debasement is. So our currency debasement in the US has been spread around the world, with all of the dollars created outside of the US. And that hasn't come back to the US. There's a lot of dollars floating around. that have had value stolen from them every time we create more, forge more currency here. So that's going to delay it. And then you've got lots of big macro factors. I mean, the US is an energy supporter, as I mentioned earlier. We're a food exporter, so we're sufficient in energy and food. Population demographics are pretty good compared to the rest of the Western world. We've got plenty of workforce. And then we've got huge capital flight to the US because capital will always tend to migrate to where it's least worst treated. So I'm not saying it's a brilliant place here, but there is a semblance of a rule of law, company law. You're not likely to get your assets stolen. You're not likely to, I mean, in China, a successful businessman can wake up in custody and 3 months later he's re-educated and released back into society and he's donated everything he's got to the CCP. That's unlikely to happen here dramatically. So I think the doom and gloom, everything's going to come crashing down in the US is somewhat premature. I think we've got a bit of road ahead of us. How we use that will determine how bad it is when we get to the end of the road.
Yeah, I like that realist view because you hear all sorts of hyperbolic things. People like to say certain things to get attention, and while I do think things certainly aren't rosy, I think there's a lot more resilience and strength. I mean, in the U.S. dollar at the moment as well, not only in the U.S. economy, what we consider the euro dollar market. This is a market most people don't really think about. You know, there's an incredible amount of countries that actually have US dollar denominated government issued debt. Like that alone is a massive engine for the US dollar. Now, I want to talk about Warren Buffett and Berkshire Hathaway for a moment because he's been trimming a lot of big positions, Apple, Bank of America, while accumulating the largest cash position in the company's history. I mean, if we look at the history of Warren Buffett, if you've read his investor letters, this seems to point to the fact that he thinks the broad market is extraordinarily overvalued at the moment. What are your thoughts there?
Yeah, I mean, traditionally, the core of their investments has been real things that make real things or railways that move real things that just year on year on year produce income. May not do anything dramatic, no rapid gains, but consistent. And his three rules of investing are: first, lose no principal; second, lose no principal; third, lose no principal. And I think there's a perception you can carry on getting return on your principal. And I think people have taken their eyes off the ball of getting return of their principal or the purchasing power of it. So going to cash, I can't see, but it's a long-term strategy because we could be entering into a second wave of inflation. Now, when I say inflation, let's be careful to define inflation. Inflation is the abnormal increase in the money supply, and it shows up as rising costs further down the line. Now, how that pans out is unknown. So I would be surprised if Warren keeps that cash stockpile. So he's obviously looking to increase the company's wealth by buying something that's on sale, probably when everybody else is panicking.
Yeah, that's a great way to look at it. And speaking of inflation, I wonder what your outlook is there. Obviously, we have another Fed meeting coming up. I think it's tomorrow, if I'm not mistaken, and people are anticipating a 25 basis point rate cut. Do you see them continuing to cut rates? How do you see that potentially impacting the economy? You know, I had Adrian Day on the channel the other day, not related to me, say same last name, but he was saying that gold has been performing so well in a high interest rate environment, which is very unusual. So he thinks as this rate cutting cycle continues, it's really going to provide further fuel for the gold price. I'm wondering if you concur or if you have any other thoughts.
Well, the bond market is moving in the opposite direction after the last 0.5% cut. Mortgage rates, I think, are hovering back around 7%, peaking. So The Fed cutting rates, I don't think there's enough people in the market actually believe that inflation is defeated. So, and this is just all smoke and mirrors. I think real inflation hasn't really yet reared its ugly head. It's been a multi-decade masking, because as we have debased currency at an accelerating rate, that has run overlapping with globalization and economy and manufacturing and producing goods and services and new technology have brought down a lot of costs. Well, it looks like we're going to carry on deglobalizing, and probably at a more rapid rate. I mean, if the proposed tariffs get slapped on China of 10, 20, 30%, 200% on cars, that's going to be retaliation. It's going to be inflationary, and the consumer will pay for it. So the unwinding of an a deflationary effect, the globalization, could be incredibly rapid. And if you add that to a realization of the currency debasement, and you add that to a leaking out of a lot of this funny money into the real economy, trying to buy real things, we could have a perfect storm, inflationary storm, that is hard to conceive that it could come so thick and fast. Traditionally the central bank would put its interest rates up to try and smother the economy, to drive prices down, make people unemployed, reduce their spending power. In Russia's got 21% base rate now, trying to combat their inflation. It's not working. We probably realistically would need 12, 15% rates to almost just destroy all of the pretend wealth that pretend currency has caused people to think they've got. I know that's a long chain of thought, but until you buy real stuff, financial instruments are fugazi, they're fairy dust.
Yeah, and I think that the people behind the Federal Reserve, indeed behind many central banks, they're not really, they have a stated mission, but I think their real mission is to kind of serve themselves and the elite banking cartel around them, large corporations, the government, which they claim to be apolitical, but I don't think they really are. Do you see central bankers that way as well, serving their own self-interest above all else?
I think they are a window onto what is really going on. And obviously the top 50, 52 nations around the world, they send the heads of their central banks to meet at the Bank of International Settlements every 2 months. And then there's tiered private meetings there according to seniority. And I think that's where the real policy gets set. That's where the winners and losers get chosen. And I think the BIS is so incredibly powerful. They or their owners are the people who are really in charge. So I think the faces we see, Janet Yellen, Bernanke and Powell, they don't, maybe this is my perception, they don't seem to be the smartest tools in the box. Lawyers, maybe, but if they were honest, well, they wouldn't have a job, would they? But to start with, like I stated, the actual definition of inflation, the abnormal increase in the money supply. We have 55 times more units of currency worldwide than we did in 1980 now. That is an abnormal increase. It's increased way beyond genuine GDP growth. Genuine wealth has not increased 55 times. And a lot of smart people say, yeah, it takes up to 2 years for this funny money to leak into the system and then prices go up. I think it can take a lot longer. I think some of this has been trapped. And, and the elites who've got lots of financial instruments, I'm sure at some point they'll be tipped off, time to bail, time to get out of cash into real things. And, maybe follow the money. We mentioned Berkshire Hathaway. Obviously that's public what he does. Any large move, any move has to be announced, doesn't it? Or recorded. So when he starts moving out of cash, we know maybe the game is getting up, that the fiat currencies are going to lose their purchasing power even faster than they are at the moment.
Yeah, some good thoughts there. I want to get your current outlook on platinum for a moment here, because I've spoken to a few people who believe platinum is extraordinarily undervalued, especially when compared to gold historically. And I listen a lot to John Polemy, and he's been saying that the platinum miners are kind of a gamble in many ways because, a lot of them are in South Africa where there's a lot of jurisdictional risk. They face a lot of problems. And he thinks that stacking physical platinum is kind of the best way to play it at this point in time. Do you see platinum as being undervalued here? And do you think stacking physical is the way to go?
Yes and yes. I mean, obviously, it's a complex market, but if we do maintain a degree of civilization, the uses of platinum just keep on growing, both in new uses and magnitude of existing uses. And what we're around now, 991, so we're around $32,000 a kilo. So, and yeah, and historically, it's always been more expensive than gold. But it's a tricky one on the bullion market. It's a tiny production. If we get a large order, we will have to talk to the mint and the refiner and get a timeline when the next production will be. There is not much physical platinum in the market, and part of that is it has really hurt the wholesalers who've held inventory. There's a hedging cost that just goes on and on and on and on, and eventually their accountants just tell them scrap it. It's so yeah. If somebody wanted to buy a lot of retail platinum, you couldn't.
Wow.
So maybe that's part of the trap.
Yeah, because here in Serbia, I actually haven't. I've been looking for platinum coins online so far, and there's nothing. Not even in Belgrade, the capital. I haven't found anything. So that's left me a little confused. And I was thinking maybe next time I'm in Canada, I'll pick up some platinum. Is it difficult to walk into like your local coin shop and buy a small amount of platinum coins, like make a smaller purchase?
We always keep some. We always keep some 1 ounce bars, coins, 10 ounce coins. We keep a small amount, but it has been brutal to the retail bullion trade. Hence why the premiums are so high. I mean, you look at the premiums of some of the companies; it's way over 10%, whereas gold can be as low as 1.5%.
10% premiums.
Incredibly, 10% premiums. Yeah. Over spot is that's sort of normal, the sort of baseline premium, which is high. So that's a disincentive for people to hold on the short term. And it has been brutal. You could have bought it 3 years ago and you're still underwater. But I do agree. I think it could turn fast. It could do a palladium or a nickel. It could do a massive move.
Do you venture into gold and silver mining stocks at all? And do you think there's any opportunity in that area right now?
I look, and and I know some of the miners. I haven't as of yet. We keep reinvesting in the physical business as we build the business. We're always aiming to increase our inventory and increase our offerings so we can be a bit more insulated about the supply squeezes in the wholesale market. So yeah, so no, we've decided to stick with, if you don't hold it, you don't own it.
Yeah, it's a great philosophy. I wonder if we're looking outside of the gold and silver space. Are there any other areas of the market that you're currently watching that you think could present value at the moment?
Yeah, not only watching, we have actually started supplying another metal. So we've started supplying Rhenium, incredibly small market. It's a 50-ton mine production per year. So at the current retail price of around $2,500 a kilogram, it's a $125 million annual market. And 3 companies take 80% of that. And that's Rolls-Royce, General Electric, and Pratt & Whitney, who make jet engines. So 80% of that 50 tons goes into that, and probably more. There's about 35 tons recycling now. So what I've noticed from the research I've done, it's a closed loop. So the reason I think the price is so low, considering it's the second rarest element and the second rarest metal after osmium, there's a closed loop from use manufacture into components, reaching their end of life, and they go back and they get recycled. So there's a virtuous circle where they don't lose rhenium. But there hasn't really been an easy way for retail investors to purchase it. So we are now offering it like we offer silver, gold, platinum, and we're offering it by the kilo or half kilo in the prime industrial form, with certification, so it will be easy to sell back into the market when we get the price action we think we're going to see.
That's really fascinating. So its main use is in jet engines, or does it have other uses as well?
It's used as an alloy. It's got the second highest melting point behind tungsten. It's got the highest modulus of elasticity, so it can cope with incredible expansion contraction cycles without failing. So rhenium alloys will cope almost indefinitely. So this has enabled a refining of jet engine technology to make them more efficient. It's a new metal. It's the last element to be identified. It's only 99 years old. It's also used extensively in petroleum refining. So when you need to boost the octane rating of gasoline, rhenium is used as a catalyst. It's also used with platinum for measuring high temperatures, and it has growing number of medical uses. So I think what we see here is almost the rarest element with industrial uses that could easily demand more than is produced. Already recycling is at a very, very high rate, so we can't really get an uptick in recycling. And we now have sunk costs in the industries that use rhenium. But if they could find an alternative, it would take years to trial and prove and test and certify before they could use an alternative. And one of the alternatives is around $4,800 a kilogram. So at the moment, the next best alternative is much more expensive.
That's very interesting. Well, that's a perfect segue into discussing ARC, silver, gold, osmium, where people can get their hands on rhenium as well as all of the aforementioned metals. Tell us about ARC, silver, gold, osmium, where people can find you.
So the quickest way is to give me a call on 307-264-9441 and email me at ian@arksgo.com. We will get back to you as quickly as we can. If I'm awake, I will answer the phone, and we'll spend as much time as someone needs to help them, either if they're a new purchaser or adding to an existing portfolio, what we think would best enhance that.
Fantastic. Well, I'll put that number and email address on screen. ARC Silver Gold Osmium has been a sponsor of this channel for, I think, 6-7 months now, something like that. And I have to say, as I do every time I have you on, I continue to get feedback in the comments whenever you're on the show or whenever the company is mentioned from people who say they have had just a fantastic experience dealing with you personally, how you're always extremely honest, and you're not looking to make the most profit for yourself. You're truly trying to look for the best option available for the customer, for their goals. And so that's fantastic. I highly recommend people reach out to Ian for all of your precious metals needs. And thank you once again for coming on the show and sharing your knowledge with the audience.
Thank you, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.